Good afternoon, everybody. It's Greg Schnell. I am here with the mid-year review for the U.S. and global markets. Lots going on out there. My charts continue to say things are setting up for a big run here, so we're going to get right into it. To find all of my blogs, go to StockCharts.com, Articles tab, drop-down menu on the right, the Canadian Technician, don't ignore this chart, and Chart Watchers, and you'll find that the Canadian Technician hosts both US and Canadian stuff rather than my previously having two different versions of the Commodity Countdown. Now it's all under the Canadian Technician. Please hit subscribe. And contact information, gregs@stockcharts.com, and Twitter @SchnellInvestor. Today's agenda, Thursday and Friday, big improvement on the charts. Lots of things started to turn nicely. And I will say Friday's volume was huge, which is not from options expiration, which it was last week. We had soaring volume, and I'll show that to you. Gold holds above 1400, so that was pretty bullish. Industrial metals prepare for liftoff. They look all set up to go here. Oils look well positioned, just starting to get some big buy signals on the big picture. US dollar continues to just be softer. Canadian dollar, as an example, was continued its surge, so that's very bullish for commodities. And again, a weakness in the US dollar helps global charts. Emerging market currencies took off. The Russell looks like it's ready to rock. And Hong Kong, Shanghai, I'd say they're setting up. They're pretty much ready to run here. So like those markets, Japanese, no change really. They were on a samurai sword edge last week, and they continue to stay that way. So let's get into it. Lots to cover off with little time to do it. So I want to say that the breadth continues to show us we want to be long this market. And the reason is we're seeing continued uptrend here, no real downtrends, and you can see we had a brief blip down here. That happens all the time, but nice quick pickup, and we're trying to break through the prior highs, but I have lots more data that suggests we're ready to go. High lows, we had that spike above, and I mentioned it last week or the week before, and that's very, very bullish. We only get that when we're entering into a nice bull market cycle here. Now, I don't know if it's this long, might only be a month, but or 2 months or 3 months, doesn't really matter. We're at the end of June here, back in 2016, and things literally launched, and you can see breaking this downtrend was pretty much in line. We're pretty much right there, ready to break out to new highs on the Nasdaq Composite. We got that signal. To me, it continues to say set up for long. New York advanced decline line continuing to trend higher, closed on all-time highs. That's not bearish, that's bullish. The net new highs just continue to perform well. These kicks up here suggest big bull, so I want to be on board. Advanced decline lines. The Toronto market started to turn back up again. Looked pretty iffy last week, rolling over at the prior high, starting to break down. Now we're resurging again. I'd say Thursday and Friday's price action really started to set us up for a big run here. The high-low data for Canada still 2 years later hasn't been able to break out. And the net new highs based on 5-day total, we're sitting at 298, pretty weak, but again, still positive. So if this can start to surge up into this big bull territory like back in 2017, that's what we'd like to see. Okay, McClellan oscillator bounced off zero and is continuing higher. Summation index is pumping higher. This looks very good here, so hard to argue with upside success. Summation index, big bounce here. And I will note that we pointed this out back a while ago, that you have this pullback and you get this little jog in here, but it's right in the middle of your run. And I would say we're setting up for this breakout and we're ready to run. This was setting up for a breakout and it was a big surge. So I think you want to be part of this, and it could be, I don't know if it's 6 months long, but it could be great. Keep that in mind. That's what I'm looking forward to. Summation index for the Nasdaq bounced off this 200 level. That's still very bullish. That's big uptrend stuff. Okay, bullish percent indexes continue to improve. We have 50% of the stocks on a buy signal and 49% above their 200-day moving average, but the trend for 5 weeks has been higher and continues to go that way. when we get into the Nasdaq 100, look at this. We're at 76% of the stocks are on a buy signal, and 78% of them are above their 200-day moving average. That's just bullish. That's breadth, and that's what we want to see. New York Composite up around 55%, so that's nice, and 64% of them are above the 200-day moving average. Well, this is kind of an important resistance area. I would also just say that the breadth is improving so much, I expect that to continue. Okay, the S&P 500 is up at the top line in my breadth range, so that's very bullish. Want to keep watching that, but that looks extremely strong. And again, this was the May pullback, which was 7% or something. It looks like a blip on the chart, but we're back up in bullish territory. That's extremely positive, and 73% of the stocks are on a buy signal. Now, this is where we topped in 2018, 2019 continuously. We want to see over the next few weeks that we get back up into these big bull market ranges. Okay, Toronto Stock Exchange continuing to hover here, but didn't really improve this week and is stuck kind of in that previous range here. So again, bullish percent index is breaking some sort of a trend line. Doesn't seem to be a meaningful indicator of anything. I'm just pointing it out that everything looks like it's ready to fire up, and we're right at the decision point. Energy, I like this a lot. This space really started to improve. Lots of buy signals in the oil services and in the exploration production. Mentioned that last week. And here's West Texas crude just kind of hovering around the 50-day moving average, but I think the OPEC meeting is pointing towards higher resolve. Bullish percent index is still below the 10-week moving average. We'd like to see that get above 50-day moving average. XLE has now been sitting above it for a week, and XOP continues to climb higher here, and OIH about to break above the 50-day moving average, all bullish. Okay, bullish percent index for energy. This looks like it's ready to turn higher. You just got to be happy with that, and that looks like a ready to rock situation. Everything seems to want to bounce here, so, and I like the deviation there. Positive divergence. Gold holding up nicely in this range. I mentioned last week probably needs a little time to pause. So we'll just keep watching that. Even if it does give you a little bit of a pullback, I'd use that as an opportunity to buy, not an opportunity to evacuate. But there's lots of good setups. So I think lots of good industries I could point you to. This is the Fed meetings, and you can see we're still a little below where we were before the Fed meeting, but it looks like we just had a brief 3-day pullback and we're ready to launch higher. But look at the volume show up, 3 billion shares. That was as much as options expiration. That is huge. And so I'm expecting big resolve out of that. If we go back to the options expiration chart, the volume is sitting in here as well. But like 3 billion shares, we had one positive day like that in March, one in February. Like, this was big volume to show up on the weekend. So I think second half is getting all set up for a bullish run. Okay, monthly performance, we're up 5% from a month ago. A lot of that last 2 days made another percentage point. Those are good gains, and again, we had the big thrust in early June. This is starting to sweeten the pot. Looks like got up to prior high, tested, and want to bounce higher. I think that's where we're going. So, okay, SPX weekly. Again, all of these charts trying to break through prior ranges. The Russell tested lower and closed at the top of the range. I like that setup. There's a couple of charts in here about the Russell that look pretty important to me. S&P 500 has broken the downtrend on the daily PPO, so it looks like we're ready to resume an uptrend. Nasdaq Composite had started to break this little baby uptrend here. This line was a little steeper than that, and that's not uncommon, but it did bounce where we wanted it to. Look at the volume soar in the Nasdaq. This goes back 2 years. We haven't had that big a positive volume. That is absolutely massive. Okay, Nasdaq 100, we mentioned that it was testing this uptrend line. It looks to me like it wants to resume that, and our PPO was just crossing positive here, so keep an eye on it, but everything looks set up to run. And again, you know, these charts are right on the borderline, but they all look hopeful from here, and there's a lot of breadth out there. So looking at the PPO here, downtrending slightly on the New York monthly. This is getting very close to turning up here, which would be bullish, and again, a breakout of this range. So we want to keep an eye on that. But closing the month out here, didn't quite get the cross, but this gets ever closer. And I think if we had another big up month, that would probably switch to positive. And these monthly charts, you can see the histograms down here don't change that often. A big bullish push on that would be helpful. Okay, New York Composite got back above this downsloping trend line, so we closed up here in, I'll say, April, and then May, the big down month, and then June. Look at that full reversal. So very positive, and closed right near the top of the range. We did make a higher high and a higher low, so that is a bullish setup. Want to see this trend line down here get broken a lot. Hasn't happened yet, but we'll keep watching. Russell, this is one of the reasons I'm getting bullish. Look at this PPO turn up right near zero. It's giving us a positive cross by 0.005 this week. So literally the two lines are on top of each other, but whatever. They're about to turn up. I put this flag on here last week with the green arrow in the yellow area. This looks all set up to turn higher. And sure enough, last week we pushed above the 40-week moving average. This week tested lower and went back higher and closed even higher. The relative strength line looks like it wants to break. And of course, the Russell performed well in the last couple of days. That's what gave us that little uptick. But if we break this downtrend, I'm expecting a big bullish rally, much like we had in here from end of December. So I like that setup. I mentioned, or I'm showing here on this chart, that these 2 points both got to very deeply oversold Russell compared to the S&P 500. Look at that bounce point there. We seem to be sitting right here at support, trying to bounce above. And again, that positive PPO setup here, that's the kind of place you want to get on board. So really like that. IWM, you know, everything's working here. This was a level of relative strength breakdown here. Just got below, and now it looks like we want to turn up. I think that's very bullish. TSX, we had this little downtrend here start to break, but we rolled over right here. If this becomes a turn up just above zero, that is absolutely bullish, and we want to get on board. When you get those tight little turns where it breaks above, pulls back, and then takes off, that is an excellent sort of setup. Maybe something like this over here where this downtrend's broken and we kind of get this bump. That's the kind of thing we're hoping for. Okay, on the weekly chart, this was cautionary, looking like it was going to tilt down. We're still up in that level of resistance, but any sort of positive turn here would be bullish. XVG, this bounced again this week, so that puts us going higher. This chart, I've got the market top shown on here, but the point I want to make is if this can finally get going, and this looks like the PPO wants to turn up right here near zero, or sorry, in this case the MACD. If this can turn up right here, I think we just want to be long, and again, a positive PPO on this chart is a very helpful thing. So keep watching. And again, we had a lot of Fed commentary last week that said they were going to basically juice the charts. So let's not be too shy about expecting that. Here's the Shanghai. We got our buy signal on the full stochastic a couple of weeks ago. PPO above zero. If this starts to turn higher well above zero, that's just bullish. Really want to be on board for that. The Nikkei continues to hold above 21,000, and you can see, I mentioned last week it was on a knife edge. Well, look at this PPO. Absolutely flat. Which way was it going to break? And again, if the rest of the world is ready to go higher, I think we can expect the Nikkei to follow. US dollar tested lower, closed slightly lower, but trying to bounce off this 65-week moving average. In currency, I think that's an important level. We'll see if it is or not. The older I get, the more I think if whatever line you pick, you use it for your trading strategy, it just gives you a line in the sand to be respectful of. And more importantly here, whether or not it's 65 or 60 or 55 or 40. These are all important just to kind of give you a sense of trend, but in this case it stayed below moved above. When it finally broke below, it was a big move. Here we broke above, and we've been trending above ever since. You could argue that I could use a shorter term moving average to get this a little closer to here, but I think the trend line told us that anyway. The PPO on the US dollar is coming down to 0. If this breaks below 0, I think you're in for a big global bull market run. And that's what the charts are trying to tell me. If I go show you EEM, it hasn't broken out yet, but it is sitting so finely tuned. And look at this, the full stochastic moving above 50. That's very bullish. PPO is trying to turn up while sitting at 0. That's very bullish. That's like right here in early 2017. Big start to a big run. If we get that kind of a setup, I think you just got to get on board, and hopefully we get some sort of rip like that. But EEM should be well set up if the US dollar keeps breaking down, which is kind of what I'm expecting. So we're about to find out if I'm right or wrong right about there. US dollar again below its 200-day moving average. Pring's special K has rolled over, and it's now below the 100-period moving average. So that's a pretty important place on the chart. And then his KST is all the way down at the bottom. The one thing I would say on this chart is, the KST, as you can tell, you can't really use it for trading well, you probably can use it for trading. This is a daily chart with the US dollar, so scrunched up. This goes back 10 years. So it doesn't look like much of a trend here, but I think breaking down out of this 1-year trend line, that was important. We're now going below the moving average, and on Pring's, when this has gone below the moving average, it's been a pretty good clue for a while. So anyway, we'll keep watching that, but I think the US dollar continues lower. We're trying to, this support level sits here at 95 cents. I think that will be something we have to decide. If we look at the PPO here, it's getting down to the level it was at 2019, just happens to be at the same level of 95 cents. And there it gave us a nice bounce. So again, I'm not expecting the US dollar to bounce, but I think all of the commodities are starting to set up like they're ready to break out. As an example, lithium, steel, copper, all started to give me signals that we're ready to get going. Okay, here's the euro, and it made a higher high, higher low, and closed about the same. Little bit of indecision, closed right in the middle of the bar. So keep watching. I'd like to see this PPO downtrend break, and obviously it looks like it would, but if it just ran up against 0, that would be quite a different story. Anyway, everything looks set up to break higher. Just seems like that's, again, can't predict the markets, but everything is starting to set up in a term, in a pattern we've seen before, where we usually get nice breakouts from this area. Euro, again, trying to run up, and the Swedish krona made a higher low, a higher high, and closed higher. So again, that's one of my early indicators, and I like that. The PPO is confirming this big 18-month trend line break. I want to see that keep going, and the krona is kind of just a clue for me that the euro probably will keep following along. British pound trying to turn up right at this trend line. And I mentioned we closed below the 3-year trend line up here, but did not confirm it on the PPO. And if this is about to turn higher right now, wouldn't that be a surprise for all of us talking about Brexit? Okay, British pound, big picture here on a daily chart. You can see holding that December low so far. We've broken the downtrend on the daily, and this is starting to wind up. So we'll just keep watching that. Japanese yen stayed above this broken downtrend here. PPO actually started to get a little closer, where the momentum was stalling, and we closed down on the yen a little bit, and that's why I think gold paused for the week. The yen on the weekly, again, we've broken above this trend line. We got this 95-cent resistance level overhead, but I'd like to see the yen let this thing keep going, and maybe we get our running commodities. We'll see. Nikkei is trying to hold this big sloping uptrend, as well as that 21,000 level. So I got to say, the Nikkei is literally on that samurai sword I mentioned earlier. Nothing really getting going there. Okay, yen daily, that still looks like an uptrend to me. We did have a breakout and then pull back right after we made new 1-year highs. So don't know if that's just sucking us in, but Friday was a pretty weak bar where we pushed up significantly higher than the previous couple of days and then closed right near the lows and gave us the lowest close of the 3 days. So maybe the yen's ready to head back lower. There is a 2-month uptrend line here starting to form. Okay, Canadian dollar. This has broken this downtrend last week or 2 weeks ago, then pulled down, and now this week ran back up. We're up against that 65-week moving average, but I do like the fact that the PPO started to break out here. So we might get a bigger push, and that would probably help me with the price of oil as well. There is resistance just a penny above, up around 77 cents. Looking at the daily chart, we can see that there was kind of a lot of area back in here, and we've broken through that, and we continue to climb higher. Again, we had a lower close on Friday after kind of an exhaustion bar. Maybe on a daily we are a little high, but we'll see if it can stay up here. This is kind of where it failed every other time, so getting a little concerned, and we're also right near 9-month highs. We'll check it out. Anyway, hopefully we can make it through there. That would be bullish for oil. XAD, the Australian, it actually closed up on the week, but has been doing a little bit opposite of the rest of the world. We are below the trend line, and we haven't broken above this PPO trend line yet. So until the Aussie dollar gets going, that might be a better clue on the commodities. But the Canadian dollar is starting to tell us. Here's the Aussie dollar daily. We can see it's up against this 65 period moving average. It closed Friday slightly above it, and our daily PPO is getting going. There is a downtrend line here that if that could start to break, I'd get a lot more excited. But I'm pretty excited already about commodities this week, but we'll just see. And again, I'm using commodities as a global demand thing, but the one thing that's starting to show up obviously is the Fed. Central banks in all of the countries are starting to activate, so that's bullish. Here is the emerging market currencies, and they continue to have a great week, so that's why I think things are about to rock. It bounced off zero. Look at this bounce, and I mentioned at the end of May, if emerging market currencies trying to bounce, will it hold? Will it hold? And it's on its way up in a big way. I think that just says get long emerging markets and get long commodities. Okay, gold obviously soaring, but here's the emerging markets currency up near the highs of the move. Now, it doesn't mean it can't just chop sideways while it resets, but we're definitely a little frothy on the daily on all of these currency charts. LIBOR continues to worry me. It's down, breaking through this big uptrend line. One of the big things I saw this week was the Reits absolutely unload. I could go get a perf chart here, and the Reits literally had let go on a 1-week basis. Just check this out. Look at the real estate this week compared to the S&P 500, plummeting. And if we just say what did the S&P 500 do? Real estate was by far the worst, and look at these defensives falling away. So it looks to me like we're very much starting up a bull market. Financials had a great Thursday, Friday, and those charts look ready to run. So again, all of these things start to point to perhaps the move in the yields is finished for now and we get a bounce anyway. High yield had broken above a prior high. Check back a little this week, but this could still turn up. Look at the PPO here, just starting to tell us keep going. IEF, this is so stretched up near prior highs, and RSI way up in overdone area. So just again, a little brief rally here or a brief pullback in the IEF. High yield has been underperforming the IEF. If this was to start kicking up, we should see this on this trend line down here. It's getting all set up to do that. And if that was to start to take off, that just says more bull. Okay, LQD, interestingly enough, is right up at this area of resistance going back 7 years. Mentioned it a couple weeks ago. We had a breakout, but we were still at RSI of 72. Well, now we're at 81. This is pretty extreme, and who'd be surprised if we pulled back from that level? Tips continue to point higher. That's the black line. So that's inflation protected. If that's going to keep running, that's very bullish for commodities. TLT, again, still pointed higher, way overbought on the weekly RSI. So, and that's an unadjusted chart. It won't look the same as regular TLT with the yields in it. Here's the BlackRock Muni Fund. You can see that the momentum has waned lately, but zoomed in it still looks okay, and the PPO hasn't crossed yet, but it's sitting right on its trend line, so a rollover there would probably help confirm a little bit of weakness in the bonds. Okay, TNX closed right near the lows, the 10-year. We're coming down to this zero level. I pointed it out last week, but we could come all the way down a little bit more before we break this big uptrend. So keep watching. We'll see where this thing tries to bottom out, but right now it looks to me like the overall market wants to go higher, and maybe that's just into July expiration, but things look set up to be interesting on the long side for the commodities. The 5-year continues to dribble down in that bottom right-hand corner. We've been floating around here for 2 weeks. PPO finally gave us a positive cross, so perhaps it's going to head back up for a while, and we had some RSI slope. I think that was last week. I denoted that on the chart, but it wants to continue to break out. Or I'm expecting it to continue to break out. US 2-year, again, been jogging down here. We're starting to get a PPO cross finally, so perhaps it heads higher, and then we'll see where it wants to go. The one thing I will point out was that in 07 we had the same sort of rattle, and we got back up to zero, and then that was kind of a better place to get worried. So we'll keep watching that and see what happens. Okay, 2-year, we just keep rolling over here, getting way down to this lower level, and if I open this chart up, you can see that back in 08 we got to a lot lower level, so the move down can get much more serious. We're only at -9, so we're right in here going across. We're like a third or 40% of the move down that we saw in some of those big moves in 07 and 08. Again, we passed the level of 2016, which was at about 5%. So it is a pretty serious move down, biggest one in 7 years. Now the real question is, can the Fed hold it all together? But the markets look to me like they want to stay bullish. Okay, 2-year again, rolling over. IRX, look at this thing unload. Finished the week near the lows. Now, one of the things I pointed out a couple years ago was the tendency for quarter end to be important, and July 1st and end of year to be really important on both yield and currency. So keep watching to see what happens here. We'll see if we get any sort of break in this yield move. But the fact that we're at mid-year would just say, if anybody was doing a half-year reset, they'd probably come to the conclusion that everything's extended on these bonds. So we can get all the way up to -4% or 4% on the PPO. We've done it many times before. We aren't there yet. We're barely at 1 3/4. So. Okay, I think that's enough bonds. The bottom line is they're not really, they're all extended. And again, I think the upside is starting to show in everything else here. So we were at new relative strength lows last week as the price fell below the 200. So it was a real risky place. And all of a sudden, the final 2 days here have put a big resurgence on. We're back above both moving averages. And look at where the PPO turned up right at zero. So this is looking pretty good. A rollover here was meaningfully painful like it was back in December. It appears we're getting just the opposite, and this wants to start to fly. So transports are ready to go. And one of the areas I noticed that was starting to improve was deliveries. So that was a really nice thing to see. And commercial vehicles ready to run as well. Okay, transports again pushing higher here up against on a weekly chart just above the 40-week moving average, but bouncing off support. We saw that the full stochastic gave us a bounce a couple of weeks ago. But again, the data out of the trucking industry is horrific. But this looks like it wants to bounce right at zero, and that's just a place to get long. That's like right in here. And so everything's smiling on these sectors. They really started to change this week from last week's bearish news. And again, we traded sideways from the Fed options expiration. We were just hovering along, and then Thursday and Friday we started to get some lift, and again Friday on huge volume, so that's pretty good. Airlines, again, no real reason to trade them, but they're starting to perk up. They had a better Friday as well. Looking at the airlines weekly, you could just see they bounced off this 40 level. That's always an uptrend, a bullish trend. Well, in this case, it's a sideways trend. We'd want to see it start to move above this PPO downtrend line, and that would give us more confidence that something was really going to happen there. But again, I don't think that's the place to look. The railroads ended the week finally turning up a little bit higher in terms of relative strength, so that was good. Still bouncing off this horizontal level of 2320. PPO gave us a positive cross, so these look like they're ready to try and turn back higher. That would obviously be a big bullish help. On the weekly chart, if it can bounce right here at 50, and you can see it still turned down a little bit on the full stochastic, we're right on this 2-year uptrend, but we're well above the 4-year uptrend. All of that just suggests caution, but if this is going to start to turn up, this is probably a good entry. Trucking bounced back above this horizontal resistance line this week, tried to give it a go. Full stochastic gave us a buy signal a couple weeks ago, earlier June. But look at the volume this week, came up nice and high, probably the best volume in 2 months. So everything looks like it wants to start going in this positive divergence here with a much higher low on the PPO and relative same price low. So this is looking pretty good, and again, getting back above that line, everything seems like it wants to run. Getting into the autos, I'm having trouble being bullish autos, but the charts definitely improved for Ford and GM this week. PPO looks like it's going to move to the highest levels it's been at all through 2019, so that perhaps breaks the downtrend. Getting into that weekly chart was breaking out. Here is the broker-dealer index, and what we see here is a big push back above the 40-week moving average, been hovering sideways, PPO right at zero. But again, the bank started to take off this week. So this is, I mean, it was all set up to fail if things didn't go well with the summit, but I think everything looks like it wants to grind higher here, and that move on Thursday and Friday in the banks was exceptional. Let me just go get that. So dollar DJUSBK, the bank index. Look at that nice push above the 200-day moving average. Got to new 6-week highs or whatever. Look at the volume coming in here. Really nice to see, and we're breaking above zero on the daily chart, but on the weekly chart, this is just a nice, beautiful push up here, and again, we're turning up right at zero. So if this is going to go positive, so it's actually the difference is, so the PPO line is above its signal line. That's what this positive number tells us at the end here. And then if both of these two numbers go positive and they're just barely negative, that is an excellent place to get long, and we would want to do that. So especially after bouncing up, pulling back gently, and then starting to take off, that's just a great place. And look at the bullish signal we got earlier on the full stochastic telling us to get long. So these look ready to head higher. And utilities, a weaker candle this week, nothing major, but we did get a breakout on the PPO. This would be interesting to see it fail right here, and then we draw a short trend line up. Maybe we should do that right now. I'll just zoom in a little bit. And if we start to get a break on this PPO trend, I think that would be a really important clue to avoid the the utilities. And again, the REITs just got hammered this week. So there's some people moving away from the safety of the REITs and the interest rate sensitive stuff. Okay, XLI, you can just see turning back up here, right? I had drawn in this trend line a couple weeks ago as this started to turn, but we actually got the positive cross on the histogram this week, or on the PPO moving above its signal line, well above zero. That's a very bullish place to be on board. So we want to see that, and that's a beautiful turn there. Okay, semiconductors, literally we're breaking to new 1-month highs. Mentioned it last week that they were struggling a bit, but we wanted to see if they could keep going. And I said transports and semis had worried me, and this week they both again turned around and started to take off. And look at this relative strength uptrend, started to push up again. So we're at new 2-month highs in relative strength. When the semis are doing that, that's bullish, and it's above zero now. So let's not avoid the news. It's bullish. Okay, nothing on this chart. Let me just quickly get into the commodities. So what we saw in the commodities, they closed month end just slightly, slightly below last month's high, but well above the last month's close. So that was bullish. So we have a lower high, a lower low, but a much higher close. So I think that is nice. Looking here on my main resistance level back at 182.10 or something, I think is the number, and we're sitting right on it. So a nice place to get long. And you can see the US dollar down here fell down right at the bottom of 97.50. This is a monthly close, so it closed right there and then fell away again. So important place. We've been denoting it for a while now, but anyway, it failed. And it wouldn't take much to get below the January levels, and that would probably mark a big turn in the US dollar and commodity resumption. So the CRB is up against the 40-week moving average, pulled back a little bit, but it looks like we're going to get a higher turn here on the CRB, and again, that would be a nice place to get on board. And we did break the trend earlier in the year, so we ran up, pulled back hard, and now this is a really nice entry. So things like Vale, Rio, BHP, FCX, Tech Resources, those look interesting. Commodities finished a little weak on Friday, but right at the 200-day moving average. Again, I'm expecting this to turn higher, and I think the OPEC news that Russia was going to support them is probably going to help rally the oils. West Texas crude had gotten above its 10-week moving average, so that was bullish. Nat gas is trying to bounce off big lows. Closed a little weak on Friday, but nothing terrible. Okay, heating oil hasn't got above its 10-week moving average, but gasoline has, and that's a bullish confirmation when that closes up with oil. Corn and soybean shooting up here, and then you can see soybean breaking out. Wheat got above this horizontal red line and then hasn't been able to do anything since. So we'll keep watching wheat. But again, the eggs are starting to improve. Here's gold, clearly a push higher. Silver, slightly higher this week. Nothing to really talk about. Copper and aluminum, you can see that copper's trying to get above its 10-week, but it is back above this uptrend line, so that was pretty bullish. If it failed here, obviously that would be a problem. Aluminum is right on the trend line here, so we'll see if these two can finish the move back up this week, but a lot of industrial metals charts started to work. Livestock continues to be a disappointment down in the bottom right. And sugar had tried to break out, pulled back just slightly, but look at this move in coffee. This actually looks real after a big 3-year downtrend. So I don't know if I'd short Starbucks, but all of those coffee companies had been making highs. They might be a nice place to actually exit with some profits, especially if it's a move away from cash flow oriented investing and into bigger growth stuff. Those could be a great exit right here as coffee starts to rise. Cocoa starting to roll over again, trying to hold above this support level that it had broken through, call it 2400, right on the 10-week moving average. And cotton continues to sit on the bottom here of this level, and cotton, as I covered off on my market watchers on Friday, is right up against a long-term trend line, like 10 years or something. Medical marijuana, this I pointed out last week that this is starting to try and turn up. This week it was off at 0.5%, but we're getting into the period where edibles are going to become legal in Canada, so that could give a lot of these marijuana names another thing to jump on. And again, as the U.S. gets closer and closer to kind of getting involved in the marijuana space, with the PPO turning up right at 0, this would be a very bullish entry. So keep that in mind. It seems like the selling is done and it's just going sideways. If that started to turn up, I'd get a little more bullish. Here's coal, and you can see it's back above its 10-week moving average. Hasn't quite broken the downtrend. Steel broke this downtrend a long time ago, back tested it, and is now back above. So I really like the looks of the steel chart, and I mentioned that last week that it was starting to improve. Both lithium and rare earth metals got above their 10-week moving average. Neither one of them have broken their downtrend line, so a little early to call the bottom on all of these, but you can see the big downtrend in rare earths was way back here. Some bounce, testing a double bottom, and now it looks like it wants to turn back up again. I think this is just a great place to get long all of these as they start to run. Okay, the energy index, we've been in this tight range, but if the PPO, it had been dripping lower, but we're starting to make 2 weeks in a row of a higher histogram here. A breakout here is extremely bullish, like big time bullish. And I know a lot of people have been quiet energy, but I went through 500 charts last week and they all looked like energy was kind of one of the best places you could have a tight stop and great upside risk reward. So keep watching those. Here's the precious metals index, and you can see clearly that move in gold was very bullish, getting to new 5-year highs. And the PPO bouncing right at 0, we talk about this all the time. Just a great place to get long. It was. And again, they've been running for a while. Ag index just continues to struggle, but things are starting to tighten up in there, and I wouldn't be surprised to see some of those charts start to improve. The livestock index continues to dwindle, so again, we've talked about that already. Nothing really going on there. Here's the industrial metals, and look at this bullish divergence. So you have a low, a lower low, and a lower low. You have a low, a higher low, and now a higher low. This double divergence is the same sort of thing we had set up in the bond market, and it was a really big move off of that. So I like the fact that this is setting up again. Now, we don't have a positive cross yet on this PPO yet, but any sort of a continued rally here would probably confirm that. So keep watching it, but I think the setup is starting to be there. And if we just go get something like whatever, FCX, you know, this chart is starting to grind higher. The PPO is giving us a positive cross at a higher low with positive divergence. Full stochastic is on a buy signal. This is the kind of thing that starts to set up. And if we go to Rio, you know, this is really starting to be a nice little base here. Any sort of turn up here would be a resumption of the uptrend. Bounced off 50, that's a bull market signal. The scooter ranking is up nice and high. So these stocks are all positioned to get going. It's whether or not they can. It looks to me like the charts are ready to crack and let them higher. Okay, total commodity index. This is an important chart to me. Notice how tight this red line is to where we're currently at, and the histogram is starting to improve. So if this can start to turn up, you're right at 0. You're very close to this red downtrend line. A break through the red downtrend line at 0, and that's an extremely positive place to get on board. Again, I'm starting to see this over and over, and it could be just the big break in the US dollar, but it looks to me like it wants to set up and run. Okay, nothing on the Baltic Dry Index. Let's get into the energy sector. There's some nice stuff shaping up here. We can see that the oil, the PPO has broken this 3 or 4 month downtrend, much like the same as the S&P 500. So I'm expecting this to resolve to the upside. Would be very bullish. Crack, this ETF started to turn back up above its 10-week. The full stow gave us a signal. We were just about to get a positive cross on the PPO and this downtrend line. So I like the way this is setting up here. It looks very, very good. Now here's FRAC, the unconventional. This one on the daily chart has been turning up for a while. We're right up against, or getting up against, the 10-week moving average. Any sort of a kick here would really help, but I started to get some buy signals off the full stochastic on things like FRAC, XOP, the oil production ETF, exploration and production ETF, starting to move higher. And again, a higher low here with a push through this downtrend line. A very, very bullish place on the chart. So keep watching, but it looks to me like that's the one set up to rock. West Texas crude, look at this. It got right to this consolidation level, and I have this blue line set up here at 64. There was another reason to set one up right around 60, and that was the low that we had in May that kind of formed this top, and then we broke down through it, and that was the cross of both the 50 and the 200 day. Well, now we're right here at the 50, 200 day, touching it again, and if we could get back through, look at the direction of the PPO this time, headed vertical. So perhaps we can break out and keep going, but it looks to me like it was way more bullish. And we also had the PPO break through this long 2 or 3 year trend line here. Sometimes you get that, and then you get this pullback, and so this ends up looking like a false breakdown. But what happens is we end up coming down, and that's actually the secondary low, and we get a nice entry buy point. So we're moving above zero on the PPO. Lots of reasons to start to look towards this area. Okay, and that's West Texas, and you can see the two moving averages formed there. The full stochastic buy signal, PPO turning up right at zero. I mean, it doesn't get much cleaner than that. This is a nice looking entry with a tight stop just underneath. Okay, getting into XOP, same thing. Look at this down sloping trend line here. A break above this wouldn't take much, and that would be pretty bullish. And this is oil set up with the line at $59. It goes back to support in here. But all three of these are meeting right now. We'll just see which way this resolves. But again, I continue to think the outcome from the oil production cuts by OPEC and Russia agreeing to that is probably going to help boost the price of oil considerably. So that's all bullish, I think, in the energy side of things. Nat gas, we've been watching this. I mentioned it in the Don't Ignore This Chart article, that it's starting to bounce up here. It's having an inside week, but it looks like it's ready to keep going here. Any sort of a move above 240 I think would be considered a resumption of the, or it would be a change in trend. Okay, let's move on here to nuclear. So the nuclear power production, again, not really a fan of this. I think the utilities are very extended. This looks like it wants to roll over here on the PPO on the daily chart. The chart I'm more interested in is the uranium chart. The uranium production. You can see we're right on this trend line, and it was also part of the discussions this week with the US and Canada talking about uranium supply. So keep watching this area for something. I will say on this chart, this is the downtrend line that we just had on the daily. Look at this horizontal support and resistance level. We had a nice push last week. PPO has now given us a positive turn, and I put the Cameco chart just below here, and we're starting to make 2-month highs in Cameco. As this is breaking through this trend line, this could be a nice place to enter. One of the problems I have with this URA is there's some gold stocks in there like Barrick and that kind of stuff, so it's not exclusively uranium, that's for sure. Copper. So we have a PPO buy signal on copper. We haven't quite got above the 20 yet, but trying to come down here and starting to turn up. We had no volume show up on the buy side. So that was, if there was one hesitancy I had, it was that nobody wanted to pick this up near the lows, or what we would like to call the lows. So we'll find out if that's a false signal. But again, a lot of the stuff, lithium and steel, rare earth metals, were all starting to move, so hopefully we can get something there. Histogram has been going up for a couple of weeks, meaning the momentum downward is slowing. We're right at that trend line, and we talked about using that trend line as a nice place for looking at support to trade against. Steel, this is the chart that's starting to set up. So higher low here in momentum. PPO trying to cross up. It's now crossed its signal line, so that's all good. We need to get through this 40.5 level, but the full still gave us a signal. If steel can break this down, 1 year relative strength trend line down, that would be an important one and would probably add a lot of upside momentum to the trade. Aluminum, as we can see, just keeps trending down here, but we're watching for this PPO momentum line to break, and if that could start to turn up, that would give us the signal we want. We're just about there. It trades so thinly, it's a little hard to love. XME, look at this big push on Friday, even though it wasn't gold doing the pushing. So I think there's some more industrial metals. And when we had gold push last week, this chart started to move. But it was more this week, and look at the scooter relative strength. If this is going to keep going, this would be a nice place to get on board. XMA, the Canadian, it has a lot of gold, and it didn't do nearly as much moving, and the volume was pretty shallow. So I'll call it, didn't trade anything like the US version, and I think it's because the Canadian version has a lot more gold in the US than the US one. But look at this chart for gold last week and the week before. Volume absolutely soaring. So is it perhaps exhausted? If it was, I'm expecting just to pull back into this 1375 area and then a resumption of the uptrend. Gold on the daily chart, again, just trading sideways, nothing really bad. Want to see this relative strength uptrend continue to hold. If that starts to fail, that would be a bigger clue. And then that's the weekly chart going back 5 years, really trying to break out here. And another one, this is one of the ways we identified this gold trade setting up, was how silent the volume had gone, and this was new 3-year lows, and it did it 3 weeks out of 5, and then all of a sudden, boom. And it did it while the PPO was sitting just above zero, so a really nice place where I guess sellers weren't showing up for work, and all of a sudden it took off to the upside. GDX continued to have an up week here, so that was okay. Again, the PPO setup was wonderful, and we had huge volume in this. We had 355 million shares traded instead of a moving average of 215, so a good 50% upside. This December was right where the stock market, this might have been options expiration week actually, to see such a huge volume. But this Twin Towers here looks pretty good to me, and again, any sort of pullback I think you'd want to buy. And just use the breakout level as your stop. Okay, nothing really to talk about in the ratio. Again, we want to continue to watch gold outperform the S&P 500. Silver, we got the PPO cross this week on the weekly, so that's very bullish. Actually, I guess it was barely there last week, but confirmed it this week, so continues to run up. That's really nice to see. SLV chart, wobbling after getting above the 200-day moving average. Let's just keep watching and see how that goes. The silver miners, they were up on the week, and we've got a positive cross, and the histogram just starting to turn up here. So this is nice setup here. Any sort of follow-on should be great. We do have horizontal resistance on the silver miners right around $28. Okay, I don't want to go through all of these charts, but here's lumber. This chart was interesting this week. So lumber, after having a big move last week, pulled back this week, and we want to continue to watch it. But I will note that quite a few of the lumber companies continued to hold up. They didn't really follow lumber lower. Again, lumber traded off this big 10-year trend line. So as long as that bounce location holds up, that would be bullish. And we did break the downtrend. This is a 1-year downtrend on momentum. Let me just zoom in on the chart a little bit. So breaking this 1-year downtrend here, this is quite bullish. Again, a higher low with the same low in price. So this positive divergence sets up quite well, and any sort of a big break here would be helpful. The scale is quite tight. This is a 100% difference between 300 and 650. So that was quite a drop of 50% in the price of lumber. Any sort of breakout back to the upside here, I think, is a good buyable low. Here's wood, and I think I mentioned it with OSB and some of the other lumber companies that they were getting pretty interesting. Wood is right at the 50 level on the full stochastic. We want to see that keep soaring, obviously, and get above. We had wood do an absolutely wonderful job of outperformance for a couple of years. It's been pulling back. If this positive divergence starts to set up, perhaps we can get another breakout on that area of the market. And I think if the broader markets start to kick up, that would probably happen. DBA, the agriculture fund, just continues to struggle at this red line. It's amazing how difficult it's been for the ag sector to get going. But if it finally breaks out, that's a huge positive. Coffee, again, trying to make this move here. Looking at this weekly chart, it doesn't look that bullish, but it's been such a big downtrend, so we'll keep watching it. Okay, what else we got here? Nothing there. Quickly, let's just go to look at some of the European markets, and the reason I want to do that is we've been worried about some of the European banks, but apparently Deutsche Bank passed the stress test this week, and it bounced nicely. You can see Germany's monthly chart just coming down to zero here and looking like it wants to turn higher. This would be a really important bullish turn, and we're sitting right in the levels of the last 3 months, but we did make a higher close than we did in May. So pretty exciting chart here, and it didn't quite make higher highs and higher lows. Made lower lows and a slightly lower high, but definitely closed near the top of the range. So this chart is all set up to be bullish if we can continue to get the turn up here on the monthly charts. Weekly looks even better. You can see over here, sitting right up here, back to the April highs. Any sort of breakout would be positive, but look at what's going on the PPO. This thing looks like it wants to turn and break above this 4-year downtrend line. That would be excitingly bullish. So I don't want to be too bearish here. This is looking like the chart's starting to break out. And again, this little downtrend that I've shown, why don't I just zoom in and make this easier? This little downtrend on Germany, and it's been restless. Like, this chart looked very, very weak. Just even 3 weeks ago, it looked like it was going to start to fall through the floor here, and found support at the 40-week moving average. But breaking this 18-month downtrend, I think, is pretty bullish. Full stochastic gave us a buy signal, and the PPO turning up above this long-term downtrend of 4 years. I think you want to be long, and I'll change my minds when the charts change. Those are changes, so it looks much more bullish. The French market, and again, we had the central bank, Mario Draghi, say that he was, he was Super Mario. He's going to add more stimulus if it needs it. And so here's France trying to break through almost 2 years of prior highs. PPO trying to turn up here, just short of giving us a buy signal, but wouldn't take much. Any sort of breakout here, and I think that's a big plus for France. On the weekly chart, PPO did give us a buy signal this week, so that's a very nice way to end June, and anything like that that's going to start to run, I think, great place on the chart. The monthly chart for China broke out a couple of months ago, came down, bounced off this big long 17-year trend line or something, and then we had broke below here briefly. Now we're testing this back trend line, but we're trying to get back above the 20-month moving average, which is the center of the Bollingers. We closed right on it. If everything goes well between the US and China, we could probably expect this resumption to resume and a really nice entry on the charts. Shanghai weekly, really wanting to start to get going. So with that, I'm going to shut it down. Thanks for taking the time to join me. Hopefully you found a lot there. Thanks, everybody. Bye-bye.